We researched numerous products and summarized
Welcome
rates
back
and
to
benefits of
another...
annuities, all from Silac Insurance
That's
Company.
weird. There we go. Oh, that was a little bizarre glitch. Listening to CNBC's annuity pitch here. Oh, that was exhausting. Okay, so let's get into pre-market. Pre-market is quite excited. After J-Pow yesterday, we basically removed a very negative potential catalyst. We were not expecting a rug pull, but we were expecting a rug tug. We got a rug tug. A little bit of a weird corner, but mostly there was no bad news. J-Pow kind of swept under the rug inflation issues. And what's remarkable is a lot of people, I was looking at some other analysts on Wall Street, and they're arguing, wait a minute, I thought y'all were going to be data dependent. And now y'all are like, nah, JK. The data's coming in worse, but we's good. It's all good. That, it's fine. It's basically good. So a lot of folks on Wall Street were a little upset about that, mostly because it makes it a little hard to predict. Like, wait, you say you're going to be data dependent, the data's worse, and then you don't address the data. You're like, nah, don't worry about it. It's really interesting. So, oh well, that's J-Pow and the Fed for you. So we've got some data sets coming out this morning. We've got just in about, let's see here, 1 minute, we're going to have initial claims for unemployment. We'll have continuing claims. We'll have the Philadelphia Fed business outlook, expecting negative 2.5 on that one. Expecting 213 jobless claims, continuing claims 1830K. And so we'll get some of those numbers. And then at 6:45 California time, we'll go ahead and get the S&P manufacturing and services PMIs. Those are always nice, just to kind of see what the strength of the economy is looking like. Taking a quick peek at the Atlanta Fed real GDP number. We did get a new update 2 days ago, sitting at 2.1%. And the next one comes out in about 5 days. So we'll stay tuned for that. And let's see here. Somebody here in the chat is spamming muted. Y'all can hear me, right? I think y'all can hear. Yeah. Okay. Good. All right. Let's get this data. Here we go. It is 5:30, and we got 210 unemployment claims, right in line. Continuing claims, 1807, right in line. Current account balance, okay. I mean, this is also relatively in line. And I don't have the Philadelphia Fed business outlook yet, so really no change here. And I think that's one of the things that's very interesting. Oh, here we go. Wow. Philadelphia Fed outlook goes from negative 2.5 to positive 3.2. And then on the revisions on initial claims, we're at 212. It's basically in line with 209. Yeah, I mean, look, when we have an average employment gain of 263,000, I believe is what J-Pow said yesterday for the last 12 months, the economy's just kicking along pretty dang well. I think that actually bodes quite well for certain parts, actually just the stock market mostly broadly. I disagree that it does well for the good old ISs, the interest rate sensitives. I actually think it's worse for the ISs. But I am very excited about the longer term enthusiasm that it calls for really just the stock market broadly. I think the stock market broadly basically is enabled to follow sort of the Nike swoosh recovery with a Fed the way they are right now, which is pretty passive on some of this warmer data, which is quite interesting. As far as the bond market and gold, it does feel like gold is sort of sending this signal that, like, hey, J-Pow, you suck. As a result, gold is up over 2,200, finally broke through 2,200. We're at 2,209, up 2.25% today. Just a good move on gold. And bonds, the 10-year is down 3.8. So I was a little surprised to see the 10-year and the 2-year down. We did get a little bit of, Hold on, let's see here. Oh no, that's more steepening. Wait, what? How is the 2-year is down 2 bips, and the 10-year is down 3.6. That's really interesting. So the 10-year is falling more rapidly, and the 10-year rate should always be higher. So if the 10-year rate is falling more rapidly, then that means we're going a little bit more into inversion. And when I look, we're at negative 35 bips inverted right now. And if we jump on over to the Fed rate monitor, F the data, we back, baby. Okay, that's an interesting comment. But anyway, if we look at the forecast of Fed rate cuts, we're looking at a 8-ish% chance of a rate cut in May. I don't see that as likely. We would have gotten a lot more imminence from Powell today. We didn't get that, or yesterday we didn't get that. We are looking at still about a 25.6% chance of no cut in June. That's pretty consistent with yesterday, but it actually increases the odds from the prior week, where we were sitting at about a 35% chance of a rate cut in June. Of no rate cut in June. So therefore the inverse, 65% chance of a rate cut. Now it's at 75% chance. So June seems to be what the market is lining up for. And markets are pretty convinced that we're going to get our 3 to 4 rate cuts by December. I personally am not. I tweeted yesterday that I thought Jay Powell somewhat implied that there could be a convenient schedule, and that schedule might look like 3 cuts, one in September, one in November, one in December, or possibly 2 cuts, which would look like 25 basis points in November, 25 basis points in December. And the benefit of that would mean no cut before the election, so you can kind of dodge these sort of claims that they're politicizing and lowering rates right before the election to manipulate the results of the election, whatever. That is definitely possible. So, okay, very good. Now we're looking at, well, let's take a look over here.
The thing is, given the pace of immigration, that pace right now is more like 200,000. So immigration is the key to understanding the labor market and understanding its relationship to inflation.
What do you think, Doug?
Well, I think Wendy has a good point. There are a couple surprises in 2023 that really helped on the inflation front. For the top line, the moderation in energy prices is a big part of the story. In the PCE, that's still down 5% year over year. The second big surprise is the immigration, about 3.3 million immigrants, well above what anyone expected. And the third big surprise is the productivity boom. I mean, we saw the biggest reversal in productivity growth from negative to positive that we've seen in a decade. And you put all those sort of beneficial supply shocks together, you get pretty easy disinflation. It's exactly what we saw. Question is, will it continue? And, it is worth noting that the one place where we've had the sticky inflation is shelter. And, if you get 3 million people coming in the country, they have to live somewhere. And so you get some demand impacts first, and then later you get some labor supply benefits.
So that gets you to where, let's just put that, Doug, in context of what we heard from Fed Chairman Powell yesterday.
I would say that, they have the tone about right. I don't think we learned an enormous amount in the past 2 months. So the moderation in inflation is what it is, and they have no reason to change at this point. Everything we're seeing in the economy keeps coming in stronger than expected. So I think the 3 rate cuts that people are talking about is the upper bound, quite frankly. It's likely to come in lower than that when we see the end of the day.
Steve?
Yeah, I'm interested, Doug.
No, I'm not. So I like this comment here. Do cuts even matter at this point? He's already anchored dovish expectations to the inevitable pivot, so market will react as such, even if rates keep getting pushed back. He chose growth over inflation. Yes, that's correct. Powell is choosing growth, which is great for the economy, and that's why markets are moving bullish. That's why one of the trade suggestions we had yesterday was, which we talked about in the Course Member Live, was if we get 4.6, go triple Qs, which is the triple leveraged NASDAQ. And I mean, yesterday we shot up quite substantially after the meeting. And here in pre-market, the Qs are up again, 95 basis points, which these are big moves for the Qs. I mean, that's almost 3% on the triple Qs. So, you know, there's a leverage play on the triple Qs. And then if you had a derivative on the triple Qs as well, there's no way you couldn't have been up. So it's really interesting. But somebody here says, I think you're right, November, December. So it sounds like of the volatile check mark left to go. Well, yeah. So I've believed in the Nike swoosh thesis, the volatile Nike swoosh thesis, check mark thesis, mostly as a way of saying that it will take a long time for markets to understand that inflation is going to go away. And as a result, markets will slowly move up to all-time highs and then beyond. However, there is expected to be volatility. Well, so far, not really seeing any volatility. We had volatility over here between July, August, September, October. And you know what's crazy is when we had this volatility, people were pissed. People were like, Kevin, the Nike swoosh is dead. You're wrong. There's no Nike swoosh. I'm like, did you miss the volatile part? And yeah, that was interesting. So sentiment can change very, very quickly from bullish to very bearish. I think right now markets are pricing in this bizarre euphoria of perfection. I mean, I think there's an illogicalness in expecting interest rate sensitives to perform well, which is, you know, I think why Enphase, for example, is green pre-market, when we just heard that the longer end of the curve might suggest higher rates for much longer, which is bad. And J-Powell suggesting we're not going back to 0%. Now, I don't know if that'll be true. I think we'll probably be back to zero sooner than we think. But I don't know if that's because we just went through a debt recession and, you know, everybody who's BNPLing everything finally defaulted. I mean, it's at some point it seems like the debt accrual has to end. At some point it feels like you can't keep buy now, pay latering everything, from your rent to your groceries. It feels like that's not sustainable, but it's happening. Soon I wouldn't be surprised if you get, you know, introducing BNPL squared. Bring us your Affirm loan to Klarna, and we'll BNPL your Affirm loan. It's just a matter of time. Just a matter of time. BNPL squared. You heard it here first. Crazy. All right, so take a look at BTC. BTC is at 67.3. Very, very impressive recovery. It is on the 200-day chart. On the day chart, you are bouncing off the EMA. Not really. I was gonna say 20, but not really. More, you bounced off this purple trend line we drew yesterday, and you had a violent recovery. And so the question is now, can you break through 69 again? I do think this was the market pricing in the risk of the Fed rug tug. And I think that's why we had such a violent response yesterday, which is, what? No rug tug? Let's go. In fact, look at this. Right here is J-Powell era. Right here. So we're at about 63.6. So you got about $4,000 of gains since J-Powell meeting. So clearly, Bitcoin is moving as sort of a risk anticipating asset. And so in my crypto video a few days ago, I suggested that prices for Bitcoin might be falling as a leading indicator of risk offness for the Fed. I believe that was exactly right. I think Bitcoin's very sensitive to the idea that the Fed might drag us into a risk-off environment because it slows inflows through uncertainty. And Bitcoin's very interesting because it doesn't have the sort of traditional fundamentals of earnings or otherwise. Really, the only catalyst you have are flows. And so, basically, are prices going up? Well, are prices going up or not? That's your catalyst. Because the more prices go up, the more inflows you have. And this makes sense. And so the more demand you have. And when there is uncertainty, inflows get constrained. So Jay Powell certainly created uncertainty going into the Fed meeting. I do think it's funny, there seem to be some folks that'll leave comments that don't seem to understand that, you know, I could like actually trade into and out of a position when I'm trading. I think people here, like, you know, on Friday, I'm like, what was it, Friday or Thursday, we're like, all right, we got a triple short position for, you know, today or whatever. And then the next day, people are like, wait, what? You closed? I'm like, yeah, that's called day trading. I always think that's interesting. But I didn't think it would be as there'd be as much of that. The day trading the weekly options is really nice because you don't have theta decay. Like, I don't have any positions right now in terms of options or a trade because, like, I don't want to pay the theta decay. So it's like I wake up and I don't pay rent. And then I go to the casino and I don't have to pay rent because I'm in and out before I have to pay rent. So, anyway. So, this is also interesting. There was a piece I saved here. Finance brief. Fed goes against textbooks in rate foot dragging. Most people who kept tabs on the Fed would say it waited too long to raise rates when inflation took off in 2021. Now, the Fed is arguably falling behind the curve again as inflation moderates and policymakers stall on bringing rates down. Oh, that's interesting. This person is suggesting rates are staying high for too long. I thought they were going to argue the opposite, going against the textbook about, you know, signs of inflation trending up. Well, that's the cool thing about the Fed is everybody's got an opinion. But yeah, I saved this, and I'm like, oh, we're gonna read this together. Nope. It's very interesting. What's the delay? One reason shows that monthly inflation reports for January and February showed a slower pace of moderation, right? But Jay Powell brushed that off so easily. He's like, well, inflation's usually warmer in the first half of the year. You know, seasonal adjustments for January, and it's usually warmer for the first half. So, sounds normal to us. Oh, okay. Interesting. What about, like, the New York Fed and the slowing and persistent growth in wage growth? Oh, well. Very interesting. Okay. So, let's see here what some of you all have to say. Okay, let's see here. I think a mortgage rate of 5% is great for everyone. Let's stick it there. Good for all investments. Nah, man. A mortgage rate of 0 is actually preferred. Free mortgages. Somebody's asking about a 36% cash position in an ETF. What do you think? Let's see here. Yeah, no, I post my, somebody's asking about anybody who wants to follow trades. I post my trades like within minutes of making them. You know, it takes me a second because I have to trade and then I have to type it out and get the picture in or whatever. But, you know, so I'm just going to post them. And if, you know, you don't pay attention, that's your fault. But yeah, they're all posted in the Stocks and Psychology Money Group. Anyway, what I'd like to watch as we go into the morning here is I'd like to watch how robust the rally is going to be. because part of me is tempted to make some call trades, but I think we need to sell off first. Like, what I'd like to see is a Dipley Doodla within the first 15, and then a rally that ends up higher than the open, in order to really exacerbate that. It'd be nice if things chilled out a little bit in the pre-market. So somebody's asking Google calls, for example. And so, wow, Google's sitting right there at a fib. Google's got to break through, what is that, 152 or so? And it appears to be roughly 152. And in the pre-market, we're mostly sideways from when we popped up, right at about the beginning of pre-market. Actually, no, this is post-market still. Pre-market was right here. Yeah, so we're flat with how post-market ended. So, very curious to see how the day actually evolves. The Qs do seem to be somewhat trending up into the open, so I think this will be fascinating. Let's see here. What causes the Dipley Doodla? Yeah, well, that's the problem. Is like what negative catalyst is there right now? There is none. So I think the only thing that would cause a Dipley Doodla at the beginning of the day is institutional selling, like profit taking, just at the beginning of the day. Very normal. You get 5 minutes of negative, straight up from there. Entirely possible. Entirely possible. So, maybe some of you haven't seen the, what's it called, update on Summer. Summer's good. Summer had her surgery, and it took longer, I guess, than expected, but it went well, and so she's recovering really well. She's on Tylenol and a little bit of morphine. She's actually on room air, so no breathing tube, which was really impressive. Everybody, people were like, what? She's like 5 pounds, 5 ounces. She's tiny. And straight to room air after that kind of surgery. It's crazy. Especially with the anesthetics. But yeah, she's right to room air. Didn't need any breathing support at all, which is really good. She won't be able to feed for probably a week or so. So you just get nutrition dumped into your heart valves, basically. It's kind of weird, but science, I guess. It's kind of cool. And now you're just sort of waiting everything goes smoothly with how they stitched her up on the inside. Reconnected her organs. That's so weird. Small intestine to the large intestine. Anyway, there's your update. So, this is interesting. What is this? The FOMC announcement was like a Rorschach test. For all the anticipation this week, it was the Swiss National Bank that stole the show, delivering a rate cut very few expected. Clearly the market was taken aback as well. The franc fell fairly sharply. Yesterday, on the FOMC, well, that was kind of a Rorschach blot test. It's kind of telling what kind of messages people attract from forecast, dot plot, and press conferences. As usual, most of the questions Powell gets seem to be, why don't you cut soon? For all the focus on shifts in forecasts, it was notable that the projection for headline inflation didn't move in 2024. So it shouldn't come as a total shock that the dot plot median didn't either. Yeah, I guess that's fair. The inflation forecast was nudged up for 2025. Yeah. And the longer term. Yeah, but it's interesting. I mean, we did get more people shift to 2 cuts at the Fed. But that average move to 4.8 didn't change the median. Just because of the number of voters, 19 of them. And let's take a look at, I think Darden reported. Take a look at how these restaurants are holding up. Yeah, so Darden declares quarterly dividend. We've got adjusted EPS 2.62, $1 billion share buyback program. A lot of buybacks. CapEx 600 mil in line with expectations. Sees fiscal year comp sales at 1.75. Expectation was 2.75. So that's not good. that outlook misses by about 1%. So if the outlook misses by 1%, let's see what the amplifier is. Yeah, down 6% here. Wow. Hit with a $52,000 tax bill from a rental home you sold in Visalia. Should I pay in installments or kill my forward? I mean, that really, it's up to you. I don't like robbing retirement accounts. The crazy thing is, selling real estate, like, that would have been a perfect 1031 exchange. So you wouldn't have had to pay the taxes. Now, don't get me wrong, it is what it is, right? But then it always comes down to what you want to exchange into, you know? Sometimes people just want to they don't want to be involved in real estate, you know? So they just want to put their money into stonks or whatever. So, very interesting. But yeah, it's not personal advice for you, but I personally don't like robbing retirement accounts. It's kind of like when people get home equity lines of credit to pay off their credit cards, and they just fill up for credit cards again. It's not good. Oh wow. Fish with Cliff got some in the money calls on Micron. Lucky you. That sucker's up like 15% in the pre-market. Is volatility higher during the first 15 minutes? Well, the nice thing about having options is usually you don't have to pay for the volatility during the first 15 minutes. It doesn't seem to get priced in, so you get a little bit of a discount, I feel like, on volatility actually in the first 15. So, I mean, it also depends on price action, but that's usually what I found. I don't know if that'll be true with Micron today, but it's crazy. Reddit is dumb. The people on the inside will make money. It's a scam for people to buy it. Wow. Yeah, I mean, I'm not really excited about their path to profitability. I don't think their data is as valuable as I think they're trying to pitch it as. But they're not doing. They'll probably be just fine. Anand hasn't had his coffee yet this morning. He's got to stick up his butt here in the chat. Yeah, Joe, just gave a little summer update. Just scroll back maybe about 4 minutes or so. Should I buy one share of Chipotle for the split and future growth? Yeah, Reddit will be RDDT. But, yeah, CMG is going to split, which is pretty wild. It's at 2,900, so people will actually be able to pay play options for it. Take a look at this, though. I mean, the explosion here on Chipotle is wild. You know, I was thinking how wild it is that, you know, Tesla has underperformed so remarkably and everything else is doing well. It just makes you wonder what's the driver of that. Is it Elon, or is it just purely fundies, or is it both? It's probably both. But anyway, yeah, that run there on Chipotle, very, very incredible. I mean, at the beginning of 2023, we were sitting at just $1,300. It's almost $3,000 for a restaurant. So, anyway, pretty remarkable. All right, I'm going to take a peek at what some of the suits have to say for us. Oh, I'm very actually curious to see what the suits are saying about the reaction to the Fed. So we should be getting some interesting insights here. Let's start with Goldman. Let's see what Goldman has for us today. FOMC. What do we have here? So they're suggesting inflation will be low enough for a cut in June. And growth in labor still remains strong. Yes, we've seen that. Now expect 3 rate cuts versus 4. Fine. Yeah, none of this is really particularly new. Okay. No need for meaningful changes in the statement. Statement was not in play. Dot plot. Yeah, nothing particularly new here. Okay, what about here? Let's open this one. We got a little bit of a... I'm going to pull this one up too, one sec. And we'll get some more reaction to it. All right. There we go. Median FOMC participant continue to project 3 rate cuts. Our interpretation is that Chair Powell and a narrow majority of the committee feel strongly about not delaying cuts for too long, and are targeting June. It's not the sense I got, but okay. It's okay to be wrong. Somewhat higher inflation forecast lowers the bar slightly for incoming inflation data. Ah, that is interesting. It's an interesting point of view. If they increase the inflation target for the year, then they can still cut and still deliver along their sort of expectation. Wow, they're aiming at June. Excuse me. June, September, and December for cuts, which is interesting because that would be a skip in July and November, right before the election. That's an interesting way to look at it. So that's basically like a 12.5% cut per meeting, right? If you sort of average, if you say it takes 2 meetings to get 25 basis points. Interesting. All right. Other key message in the March projections was that the median longer run neutral dot picked up 2.56 and the terminal dot moved up. This is consistent with our views that the FOMC will raise its estimates of both long run and short run neutral rates over time. Yeah, that's not great. That's the problem that I say for the interest rate sensitive. Is that the terminal rate will be meaningfully higher than the last cycle. Bad. Bad. That's bad for interest rate sensitives. Powell's not concerned about Jan-Feb inflation. That's true. Key question is how would the FOMC react? But however, they maintained their 3. Okay, yeah, this is just getting a little bit more into detail. Yeah, well below, not terribly high. He just gave up on those inflation reports. That was wild. We'll look for another one here. Let's listen in here for just a moment.
Markets see another solid session setting up after really some outsized gains yesterday to new highs. Another 175 on the NASDAQ. Make sure you join us tomorrow. Squawk on the Street is next. I think the Reddit guy's coming up.
Good Thursday morning. Welcome to Squawk on the Street. I'm David Faber, live from Postline at the New York Stock Exchange. Jim Cramer is at our office at One Market in San Francisco, and Carl has the morning off. Let's give you a look at futures as we get ready to begin trading 1/2 hour from now. Looks like we may get a continuation of yesterday's rally, and that is where our roadmap begins this morning. The S&P topped 5,200 after the Fed said 3 rate cuts still likely this year. And, of course, this morning, we're still waiting for that Reddit IPO right here at the New York Stock Exchange.
Yeah, you'll be waiting about 3 or 4 hours for that one. Don't hold your breath. Bank of America. Our read of the March FOMC meeting is the Fed has fully embraced the positive supply-side arguments of Powell. Significant upward revisions to growth were not complemented by significantly stronger inflation. On the recent strong Jan-Feb inflation data, he was dismissive. Yep. Careful in how he said it, though. We recommend investors remain patient on adding duration. Using the 10-year as a proxy, we believe clients and investors be tactfully adding duration exposure at over 4.25 and consider outright longs closer to 4.5. Wow. So pushing these bond yields up would be very interesting. You've got the 10-year right now at basically exactly 4.25. Let's see what else. Okay. What is this? Median member still suggests 3, but it's roughly a 50-50 view. Maintaining for a June cut as well, Bank of America. Data-dependent Fed that sees further inflation prints between now and June could end up delaying. Yeah, that is true. When pressed whether the Fed would accept higher inflation and whether employment would preclude cuts, he said no. He emphasized 2% was still the target. Yes, he did. Willing to look through the recent inflation data. Dovish Chair Powell. That was highly unexpected. Yeah. All right. Market obviously excited about that. So I did just notice Google go negative. Why? Look at that. What happened? Let me see if there was some news out of Google. Let's see. Google. Nope. No particular news there. Just, I guess, a trade candle driving this sucker down. Huh. Okay. So, Apple, if you haven't heard yet, DOJ is expected to file an antitrust case as soon as today against Apple. So, Apple's, I believe, one of our reds this morning. If we jump in to the red side, we've got Darden, Blank, Petco, Apple down about 65 bips. Embraer's right there as well, so not much of a move for Apple. Not a lot of red either. I mean, we're less than 1 page of red. Here, I'll hide myself for a second. Look at that. Less than 1 page of red. And flipping around. Our upside is, look at that, 3% on Palantir, 2.5% on NVIDIA. You've got ASML up 3%. Let me see, did ASML, I think, when was their earnings report? Let me find out. Let's see here. ASML shares rise 4.6% in Amsterdam, the most in a 1-month period. Wow. A lot of enthusiasm over there in that European market. Well, kind of seeing that globally, I feel like. All right. Oh, yeah, Micron's popping off, too. Micron on like, memory, seeing a big move on AI demand, AI-related demand. Listen in.
Jailbreak, David. You had a jailbreak. Everything moved. With the exception of some healthcare, everything
Justified,
moved.
though? I mean, again, all right, we didn't get, a reduction in the dot plot from 3 to 2. We got the still expectation of 3. Perhaps he was less hawkish during the press conference than some had anticipated the Fed chair would be. Is this move justified based on the prospect that we still do maybe start getting rate cuts starting in June?
If we do that, yes. But I want to be clear that the market, there are 2 markets. There's the markets that are really being driven by the demand of customers, okay? And that happens to be tech. And then there's markets delivered by animal spirits because the Fed was less hawkish than we thought.
Luke, I like that. Buying the stocks course? Oh, that's exciting. We'll be excited to have you. You know what I like more than materialistic things? Knowledge. That's awesome. So throwback to some OG YouTube, I feel like there. The price does go up on that Stocks Insight group Friday at 11:59 p.m. We've had a lot of people email us for bundles who don't already have it. A lot of people ask questions. You just email us at staff@meetkevin.com. A lot of people just buy. And so we're excited to welcome all the new members. And I'm excited for the next trades that are coming out over the next couple days here. I'm still setting up a strategy for today, mostly because I think there's a chance you have an early dip and then a rally after that. I'm not convinced yet what direction it goes if we just rally right at the opening bell. That'll be a little less, I feel like, predictable. So we'll see. We'll see where the market wants to go.
These cases can go on for years, and there are any number
yes.
of them already out there. We've obviously referenced the DOJ case against Alphabet many times, What are your expectations here?
Well, look, I think the main point is it's going to go on for years. Look, if it's the Apple Store, I remember when I started TheStreet.com, which is now owned by the 5-Hour Energy Drink guy. Very interesting piece by Amy Javers this morning about that fella. But what's most interesting is that your decisions are always, do I go to the App Store and let them have 30%, or do I do it on my own? And I have always said to people, unless you're a huge brand, let them have 30% of what you make, because you may get nothing doing it on your own. So I've always regarded the regulators as not understanding the way small business and medium-sized business work, which is that without the App Store, you're dead. And forget the fact that they take a percentage. You won't have a lot of sales if you don't have the App Store. But the government has been after the App Store and hates how much...
Yeah, there's been so much antitrust, but honestly, it's somewhat exhausting hearing about... I mean, I saw this, yesterday, 250 million euro fine against Google, DOJ case coming today against Apple, constant slamming on these app stores. And you know what? I mean, in the end, the idea will just be less potential fee taking for these app stores and less power. I mean, they're very, very strong. You try to create an app and you get gated because they don't let you in. It's tough. It's tough to compete. You know, you really lose some of the free marketness with some of these app stores. So I understand it. I also see the other point of view of like, well, these are our app stores. They're private for, our devices. It's gonna be interesting, but I'm not so enthused about sitting and paying attention to every fart in those cases. I also had a hard time getting through I was going to make a video on the Biden impeachment yesterday. Just here's what Dems said, here's what Republicans said. But boy, I don't know. I only got in about an hour on 2X, so maybe 30 minutes, and then I was sort of writing together my thoughts. Maybe spent about 90 minutes on it in total. It's like 4 hours long. It would have taken me a lot longer. And then I realized I'm not interested. Like the both sides. The debates, Congress is so annoying. Like, they're all so political. Both sides. And so it's hard to know what to believe. I just call it annoying. It's annoying. So that's why I like the sticks. The sticks are like, Kevin, we're either green or red. And then we're either going up or we're going down. They just tell you. Anyway, so let's see if we can watch Bitcoin to get any kind of early indicators here. Looks like we're at 67.4, and 67.4 is a number that starting to tick up a tiny bit, little bit, as we kind of settle out from some of the rally we had overnight, and getting a little bit of a look at that, 67.5 now. It should be optimistic for markets, but I don't know if it's enough of a breakout yet. So we'll see. We'll watch it. Watch it very closely. Intel barely moved yesterday, by the way. Intel only up 36 bips after getting basically $20 billion in loans and grants. $8.5 billion of free money, and it barely moves. It's crazy. Yeah, thank you so much. Training. Congrats on the positive surgery. Go Summer. Yep, thank you so much. Very, very exciting. I wish I could go visit her, but I think it would be wrong while I've got this leftover cough and some sickness to visit her. Selfish, I call it. It would be wrong. What do you think about the VIX being below 13 now? Does this raise any flags to you? Yeah. It's very problematic. The VIX should be bouncing, and we should be getting at least a spell of volatility soon here. Look at this. I actually have a trend line drawn on the VIX, so it's funny you bring it up. And we're now breaking below trend. That's weird. So I would expect some form of volatility again. I don't know if we're going to get what we saw between July and October. This sort of bounce. You probably should. Or even like the banking crisis volatility. Like, you need some vol. This extended period here with low vol does make for potentially having some kind of hedge bets on, like, calls on the VIX, basically. Very interesting. I haven't done it, but I'm definitely watching that as an idea. I think the volatility level is way too low. The green indices are way too high. And the movement has been too quick for many. But then again, everything goes a little faster these days. Thanks to the internet and the accessibility of trading. Yeah. So. All right, what else? Let's see. Let's see if I can get another set of thoughts from the suits. We went through B of A. We went through Goldman. How about Barclays? Meetings sent a dovish message. Does not expect to reduce the target range until it has gained confidence. It's pretty much the same thing ever. Strong GDP projections in the SEP. We maintain our call as we think the Fed is itching to cut once the data presents an opportunity. Yeah. Still sitting at 3 rate cuts for 24 and 4 in 25, placing the rate target at 3.5 to 3.75 at the end of 2025. I don't know that that makes much of a difference, though. I mean, I guess it makes like a little, like a 1.75% difference, but you know, does that get back to the same euphoria that cars and solar and such had during 0% interest rates? Probably not. You know, I don't know. All right, this is here.
Thank you for having me here. It's truly an honor to be here. It's been a journey.
Look, it's Mr. Reddit.
To be surrounded by our employees.
This guy got memed so much on the internet regularly.
For our communities to make Reddit what it is. So in this IPO, yes, we invited a number of our users and have a healthy retail component beyond that. And our goal there was to bring in, I think as is the ethos of Reddit, level the playing field, bring people in on the same terms that professional investors would. And so it's a free market. I hope they believe in Reddit and support Reddit. But the goal is just to get them in the deal, just like any professional investor would.
Well, there has been a lot.
That's such a lie. They need the liquidity, man. They need the liquidity. Like, they need retail investors to buy the shares off of them at the morning. So it's like, yeah, we want to give everybody an opportunity to buy. Please buy.
Those retail investors, very high-profile presence, is going to drive volatility in a bad way.
Well, first of all, look, I love Wall Street Bets. I'm a user. I've seen their comments over the last couple of weeks, so I just send them my regards. And again, that's Reddit. Reddit is people. Reddit is a fun and special, but sometimes crazy place. And so I wouldn't expect anything less from our community.
It doesn't upset you, though? You're like, wait a second, we're going public. You guys are a part of this. You've helped us in terms of our success. Why aren't you more supportive?
Look, that's exactly, I think they've helped us get here. Reddit is nothing without our users and communities. And I think that's the beautiful thing about Reddit is they tell it like it is. But God, you have to remember, they're doing that on Reddit. And it's a platform they love. It's their home on the internet.
It's a good point.
And look, I think it's such a privilege for I and the team to get to work on Reddit, but they really are Reddit.
Steve, one of the questions I think that's come up a lot is the company's been around, as Julia said, for roughly 19 years and has not managed to be profitable in any of those years. And so what will change or has changed if you haven't been able to figure out how to get to profitability?
It's a data licensing.
Well, so first, that's not exactly true. So we have been around 19 years. So I came back to the company, though, in 2015, and that's when we really started to build the business of Reddit. And that hit high gear in 2018, really, when Jen Wong joined as COO. And she's really been my partner in running Reddit and building this business. But we made a profit in the back half of 2023. We grew revenue 3 times as fast as costs last year. And so what's, I think, beyond the community of Reddit and the platform of Reddit, there's actually a very nice, special business here. And our gross margins are very high, the high 80s, and have been for a long time. And so even small improvements in revenue go straight to the bottom line for us. And so this is truly, I think, a special company, and profitability is, it's an important milestone for us, and we're getting closer and closer.
I know Jim has a question as well for you. Jim?
First, Steve, thank you for being on the set. It's fantastic.
Thanks, Jim. It's great to see you.
Absolutely. Wanted to know, when I talk, it's just really important, I believe, that people who have been so important to your company, the Redditors, get stock if they want stock. Were the brokerage houses understanding of that? Is it placed with people you think that actually have done so much and might actually want to hold on because it could be a great stock?
It honestly was not a controversial ask at all of our bankers and of the investors. What we've been pitching, and we've been pitching Reddit for 2 years, telling them why we do this, why it's special, and we've met so many investors who get Reddit, who understand Reddit, and know that this is, including our users in a moment like this, is the most natural thing we could do.
And we'll make it clear, it's not just Wall Street bets that want stock, right? I mean, those people might be sellers, who knows? You're talking about hardcore people who have really helped build your brand away from stocks. I imagine that they want to be long-term holders.
I hope so. I think the best investors of Reddit are people who use Reddit. And so I want our investors to be users, and I'd love our users to be investors. I think, we're all building this together. We're building the platform, and now we get to build the company too. I think it's just such a privilege.
So speaking of building the company, your business is currently 95% advertising revenue. And with for those ad dollars, you're competing.
Right, data licensing is a very small percentage of what they actually do.
It's an incredibly competitive space, and you're very small compared to these other players in terms of the number of daily active users you have. What is your strategy to be able to grow market share in such a tight environment?
Sure. So I have two answers to that. First is the digital ads market is so huge. It grows by 5 to 10 Reddits per year on its own. And then what's special about Reddit is whatever you're into, whatever you're going through.
Okay, this guy's kind of boring, honestly. I'm tired of this. So, all right, what's next? We've got, I like the headline on the Wall Street Journal. Rates are too high and too low. This sort of argument that there's still work to do, but then we're at these levels of restrictiveness. Do we want that? I do want to see if Nick T has any deliciousness for us today. It seems like Nick T 2 hours ago tweeted, wow, up early, 420. Wow. Estimates of the long-run Fed funds rate by Fed participants. So it looks like why the era of historically low interest rates could be over. Despite, I think we'll go back there in the longer term, but you probably need a recession to get down there again. Despite the Federal Reserve raising interest rates to a 22-year high, the economy remains surprisingly resilient, with estimates putting third quarter growth on pace to easily exceed its 2% trend. Exactly. The issue is what's known as R-star, the neutral rate. Yes, that's right. Everybody's basically thinking it's going up from 2.5-ish, or needing, 2.5, where policy is neither restrictive nor accommodative, and so that way you have room to kind of go above or below. So yeah, estimates of the longer run R-star, 8 of them at 2.5, 1 of them below 2.5, 9 of them above 2.5. So that'll be interesting. That's a little Nick T observation. Not much else out of Nick T this morning. It's the only thing. And, yes, just a quick daily reminder. 27 seconds ago, we have Google is deeply infected with the woke mind virus. Yep. So that is, that's really interesting. Changes in sort of which dictionary shows up. Wonder how much of that has to do with cookies. But anyway, that's the CEO of Tesla for you. Gotta wake up and remind you about wokeness. Now, I know a lot of people, there are probably 50% of people who is like, he's doing the right thing, he's saying the right things. It's okay. I'm not imparting an opinion on whether he's right or wrong. I'm just saying, notice how it's not Tesla. It's very border and woke. All right. I don't want to see this guy anymore. That guy's exhausting. So let's see here. Google. Let's see. Google's up. That's weird. You had some barcoding on Google. I don't think that was actually what was going on with the stock when all of a sudden it dropped about 1% there. You know, from where it was. So, because it's back to about 55 basis points positive. And market is getting excited going into the open. Does seem like you're getting a little bit of a push up. Does look like Tesla fell a little bit. Look at that almost perfect rejection here. Perfectly rejected at 178.38. Will it break out today? Well, we shall see. Look at that. Reddit listed today. Nvidia up 2%. 7 minutes to the opening bell now. And let's see what else the news is. So, what else? Initial U.S. jobless claims, sign of resilient labor. I don't really know what that headline means. The jobless claims came in just as expected, so I don't really see much over there. Disney Plus crackdown could boost profit expectations. Ooh, cracking down just like Netflix on password sharing. I mean, there's a way to make it really annoying, and make it so you're certain only one person is using it at a time. But boy, people get pissed when they have to log into a TV. So it's kind of a funny issue to deal with. I can't stand having to try to punch passwords into a remote control, especially if you're using secure passwords. Oh, it's just bad. All right, while Mr. Reddit is over here, let's go see what the Doomers have for us this morning, if anything at all. Who knows? Maybe they'll just be on commercial again. Yep, on commercial. All right, only thing red so far here is Apple. Apple sitting at negative 86 bips, it feels like. Well, then again, we do have Darden. Let's see. Let's go negative here. Let's see. Almost nothing to the downside here. And this is a very short list on the downside. You can see that here. And plan to make some trades today. If you want to see those trades, we've been pretty dang profitable this last week, which is very exciting. So if you want to see those trades, make sure you have notifications on in the Stocks Insight group. I'll send those as soon as I make any. And yeah, this is it in terms of what's red. You've got shorting the Qs being red. Embraer down a little bit in pre-market, although it's very volatile in pre-market. Apple almost down 1%. Dix 60 basis points. Wingstop slightly red again. And Darden down 5.7. Wingstop, I think, is so interesting. It's finally feeling like it's really trying to break to the downside, but very slowly. So I'm watching this one as well. Puts at open TBH, says someone. Ooh. Someone else here says, this is absolutely unreasonable euphoria. Ooh. Let's see here. Somebody's buying the dip. Puts at open, sell quick. I don't have any positions. I've already talked about that. I've been day trading to prevent any kind of theta decay. Especially on the shorter term options. The theta decay could be like 30%. It's crazy. Very interesting. Kevin thought you were a Tesla guy. I love Tesla. I think Tesla's great. It's I was doing some FSD driving yesterday. I want to post that FSD video too. It's overall pretty good. Version 12.3. I haven't seen a lot of people negative on it. I think overall it's definitely a step forward. I think it takes you from like 95% to like 97% in the world of autonomy, which is pretty good. It's definitely moving up. Toyota developed a hydrogen car. What, the Mirai? That's old news. Am I getting a Cybertruck? Cybertruck, probably not. It's been a year with the Phenom. How's the jet? Jets are amazing to get around real fast. Yes, but a smart think that's not really news. You missed Powell saying Black Swan event could make them make intermediate decisions. I didn't miss it. I heard it. I just thought that was already known. That's seems like relatively old news. So, all right. We are now 2 minutes away from the bell. And I'm very curious to see, given that we are, it does look like we're pulling off a little bit of a rally into the open here. Let's listen in.
And one of the reasons why...
No, he's just talking Five Below. All right, all right. Let me look at this. So, pre-market, let's see. Western Digital. How have they been moving? Ooh, Western Digital is going to come up against a trend line here. You might get a breakout on Western Digital. Ooh. I'm going to write that one down. Let's write down some things here. Western Digital Corp. I know Astera, after having IPO'd yesterday, could be enthusiastic again. But that was a pretty strong rally there on probably likely underpricing the shares. SMCI. I think this is its first positive day in a minute here. Supermicro. If I go to the hour chart, 1 minute to the bell, by the way. Ooh. Let's see here. Yeah, maybe you're going to make a head and shoulders here. Ooh. Trade sideways for a little bit. It'll be interesting. But nothing seems to trade sideways. Oh, scratch that. Nvidia's been looking somewhat sideways. It's been trading between 850 and 920 here. That's interesting. Oh, how's BTC? With about 40 seconds to go for the bell. Oh, up another $200 since we last looked. Just exciting. Oh, that's very, very, very exciting. All right, let's get that bell.
Are you?
Well, I just think if it's placed well, yes. I mean, I think that there's people who love Reddit, and they're the kind of silent majority, to use an unfortunate Nixon term. And then there's the kind of rabble-rousing people who really genuinely feel that Reddit should be more of a Greyhound bus, like a kind of a common carrier of stories, and it shouldn't necessarily be making so much money. I think that the people who own it and have owned it for a long time want the stock and want to own it and not trade it. If those people got a lot of stock, then the stock goes higher.
All right, well, there it is. The opening bell this morning, of course, doing the honors is Reddit, celebrating that initial...
All right, all right, all right. There's Reddit at the bell. Cool. All right, which way are we going? The Qs are stable. I've got a red candle on Tesla. I've got red candle on Google. That red candle's getting smaller on Tesla. Might go green here in a moment. Tiny little drop of about $150 on BTC. Come on. Which way are we going? No idea yet. Q's somewhat sideways. Let's get some of the underlying. What's Nvidia doing? Red. Still sitting about 1.95. So just right from the open. Still up though, obviously. Let's look at other underlying. Google. Google's trying to push. APL. Apple is trying to push down. So they kind of offset. Microsoft. Got some red candles here. I'm getting those red candles at the open. This is interesting. I was... One of the things I was thinking is maybe for about 15 minutes you get some red candles and maybe it creates some opportunities. But they're not really that much of a move right now. I mean, we're the same price as where we were 5 minutes ago on Nvidia. Apple seems to be trying to extend down a little bit more. You did get a larger candle here on Tesla rather, 1.3. Right after you only had 1 minute of a red candle there. And let's see here. What else is moving? How's Astera? Astera's moving. Western Digital. Let's take a peek here. Okay. Wow. Less than a minute there of red. With the exception of Apple. Yep, even Nvidia's pushing green now. Nvidia's pushing up. Q's sorting. I mean, this is sideways. Not really seeing anything here. Darden, even Darden got some green candlesticks. I mean, they went from -5.5 to 4. Somebody here says Riot is running a bit. Yeah, the TQQQ trade yesterday was great. If you didn't see that one yet, make sure you check the Stocks and Psych group out and you get all the trade alerts. But if you held that TQQQ trade through to today, it should be pretty nice. So, getting that red candle on Western Digital. Red candle now on Microsoft. Nvidia still above 2%. Wow, Tesla just turned red. Oh my gosh, look at that volatility. Holy crap. You've got, this is bizarre. I don't think the market knows which way it wants to go today. Astera is going up. That's all it is. And where else are the bets? We don't know. We don't know where the bets are. Broadcom's up another 4, ASML 3, Palantir 2, Affirm 2, and they had good days yesterday. Toll Brothers, KB Homes are up. Yeah, and like they lost all their competition. All the OG resale homes aren't selling. Wow. Embraer's down about 3%. A little bit of a give back since the crazy run that it's had. Well, this is an interesting one. Very interesting start here. Let's take a peek. I'm watching those Qs turn red. All right, let me see if we've got updates here. So, excuse me. Okay. Traders flock to momentum. Yes, yes. It's not news. Economic data. We do get economic data in about 11 minutes. We're going to get the manufacturing and services PMIs. Okay, and Microsoft wants to go green, but Nvidia just had its red candlesticks come through. Tesla green again. Boy, the volatility. Interesting direction here. Still up 1% on the Qs. Okay, very well. Let's, in the meantime, see what the Financial Times have for us. Let's see here. Ooh, I want to see Carvana. How's Carvana doing? Almost at 90 again. That's a resistance point. Yep, 91. And then Nvidia's giving up a little bit. Look at that. Some fatter candlesticks on Nvidia coming through. Oof. All right. Is this the first 15-minute dip? We shall see. Interesting piece in the Financial Times. Why no one will lend to Trump. I always thought it was because of the difficulty of valuing some of the real estate. But no easy way out from the $454 million he owes. Let's see here. Even if the numbers prove correct, most of his wealth is locked up in illiquid assets. Yep, chiefly real estate, such as Landmark Towers in New York and golf clubs. Right. Those are hard to sort of value, and lenders realize that too. Interesting. Okay. Not lots of news today. That's all right. Again, we'll get those manufacturing and services PMIs in about 9 minutes as we kind of watch what's moving on. And Carvana turned red. Qs are staying at 1%. Not giving up on that percent. Western Digital down a little bit. Tesla's at 0.75. Enphase is the one that's rallied 2 days in a row now. So, nice move here on Enphase. I don't think the rate trajectory long-term was good for Enphase from what we got yesterday. But in the short term, reiterating 3 cuts is moving the IS stocks. I call them IS, interest rate sensitives. How are the financials doing? Like, how's SoFi doing? 163. It's sitting at about 7.5. PayPal. Have you noticed PayPal rallying? PayPal's been moving up for the last about 10 days here. So some solid moves there. All right, let's listen in briefly here.
2000. We don't want 1999. Buy companies that are doing well. I mean, this company is because it has AI. You know, David, we're going to get it like, I have AI, you have AI, let's go buy me.
It's following through today. It's following through today.
I know.
mean,
I was hoping that it wouldn't.
Liftoff after its IPO yesterday. Yeah.
I was hoping that it wouldn't, because when I went to the website, I said, okay, look, they've got all the buzzwords. They have everything that you need to be able to say, hey, I'm an AI. It's like we watch every morning SoundHound. It's like, oh, they're AI. I mean, because NVIDIA gave them a nod. We don't want to be in the world where you can say you have AI and then your stock goes higher.
Are we in that world or not? Every company felt obligated to mention AI in their conference calls. Then things seemed to die down. Now we seem very much focused on a handful of companies that are the true beneficiaries right now before this thing really gets into the enterprise in terms of all sorts of applications that haven't yet been invented, frankly.
Right. Well, that's why Micron is here now. They are on allocation for their high bandwidth memory chips that go into this. That's a real AI play. Okay, that does make sense. Cadence, Synopsys, they are real AI plays. They make sense. I don't want everybody to come public who's ever done anything AI and then claim that they're the next NVIDIA, because everybody wants the next NVIDIA and there isn't. There's just NVIDIA.
NVIDIA is the next NVIDIA. I think we've said that a number of times, haven't we?
No, I mean, you know, Apple's being,
I remember back when that phrase used to be Tesla. It used to be Tesla is the next Tesla. That's scary, that phrase.
It was actually a chair, but I still lifted my leg like I was in a car. It was incredible. If Apple adopts what NVIDIA is saying they should do, it can be big business to business for Apple. But right now, you have to explain to people it's still in its infancy, and many companies haven't yet figured out how to use what NVIDIA is doing. Except for then you get companies like Amazon that have figured it out, Meta's figured it out, Alphabet's figured it out, and of course Microsoft's figured it out. There you go. That's me looking at a Nissan car and selecting colors for it, and then later on getting in the bucket seats thinking I was in it when I was really just in a chair in a room.
Interesting. Yeah, look at that.
You see, there's one picture where I'm trying to get under the hood. I'm trying to actually open it, and then I go under the hood. And I'm looking at the engine. The engine looks fantastic. But does Apple even know what Jensen's got going? I'm not even sure how Apple even understands. Of course they know, but how
I'm sure they do, yeah.
Big.
Waiting for some news here, Jim. I just got it on the Disney proxy fight.
The CEOs who endorsed Nelson? Did you get that?
No, I got ISS. No. And ISS is an important proxy advisory firm. And they are advising to vote for Peltz on Triumph's proxy card. Not Jay Rizzullo, but they do go for Peltz. And
ISS.
ISS.
All right. So more Disney proxy fight talk. Snowflake's up about 3% today. The Qs continue to push. Look at that. You got a dip for about 6 minutes on the Qs. You went right back to the open price. You didn't go below the open price, and now you're rallying. Incredible. Apple at 90 bips to the downside. Nvidia is actually getting stuck, which is very interesting. I'm seeing a lot of stocks kind of getting stuck. Enphase did very well there, settling out. Tesla's getting stuck between the two ranges here. MicroStrategy's moving up. TQQQ obviously doing well. You've got, what else here? Coinbase coming up about 2.5%. ARM's back at 133. It was down at like 220 or 125 there for a minute on some of these lows in the low 120s. Very interesting. But even Snow Snow's almost bouncing off of this 146 level here. But even they're slowing down a little bit. Well, still looking good, though. Still sitting at about 1.2 on Qs. All right, very well. So let's go back to, let's see what else pseudos have for us, if anything. Utilities set to outperform bonds. Oh, okay. That's interesting. Then we've got, let's see. DOJ to announce their lawsuit today. Target employees, bonuses double to 100% after profit jump. Nice, good for Target employees. Global inflation scare fades. Yep, fading the inflation fears is consistent with a volatile Nike swoosh, except haven't really seen the volatility. I'm somewhat at a loss for the directionality today here. I mean, look at this. You get this run, and now it's turning red again. You get the run, the pump. Now you're getting some of the dump. But for Nvidia, it's been a bleed today. Intel, wow, moves 3% today, the day after the excitement on their $20 billion gift, basically. Thank you so much, Ara. Appreciate that. Yeah, Summer's doing great right now. Pretty excited. What's the cheapest option at the moment for course member live streams and trade? It's the Stocks and Psychology of Money group. And that's at meetkevin.com. Raising the price Friday at 11:59. So you still got, you got a day and a half here. But yeah, any alerts I send, I'll send right away. Yeah, and keep in mind when I talk about trades on the channel, and some of the trades I hold for 6 hours, some of them I hold for an hour, some of them I hold for 3 hours. Yesterday, right before the Fed meeting, I'm like, I kind of want to trade something between the statement release and when Jay Powell talks. So that was, within 30 minutes. So it can move fast. But that's the point. John London says, well worth it. Thanks so much. PayPal, is PayPal running? If I mention it? Let me see here. Yes, Morgan. I'm seeing these. Let's take a look. PayPal. Oh, yeah. Look at that. Straight up there on PayPal. Another 2%. Another 2%. And then you look at Nvidia. Oh, Nvidia. Just red candles down. The event is over now, by the way, right? We had a 3-day event. Monday, Tuesday, Wednesday. And that event's over. So it makes you wonder, is this back to sort of buy the rumor, sell the news? Ooh, PMI time. Thanks for that reminder. I almost forgot. Thanks, Matthew. Well, I know YouTube. It is on YouTube, Morgan. It's on the Meet Kevin Market Open live stream channel. That's where we do it now. Market live stream channel. Anyway, PMIs. All right, we're looking for manufacturing 51.8. We got 52.5, stronger than expected. Composite comes in at 52.2, and services come in a little weaker at 51.7. That's bullish across the board. That's pretty good. I like that. It should be a more green reaction there, but really, it feels like stocks made their moves here, and now you're kind of getting stuck sideways. Sideways is bad if you're trying to bet on some big moves on options. A lot of these. So Darden 6%. Tesla's at about 1%. Embraer down 2.5%. Yeah. All right. I called a step, bro. Yeah. All right. Let's check the next thing. So that's good news. Congress unveils its latest funding proposal. Fine. It's so quiet today. And a Reddit IPO is the next big thing here. Huh? Well, let's listen in. Here.
Among certain shareholders. By the way, you can't even short it at this point. The borrow is simply through the roof in terms of how expensive it is. But I've also heard, as you might expect, and have not been able to confirm, that at least there have been some conversations around, is there a way for Donald Trump to use some of this enormous stake as collateral for a loan that would then be posted to meet this bond requirement? He has a lockup. It's 6 months. It's not clear, though, whether that would have to remain in place fully for that 6-month period. There may be some ways to work around that. Jim, but I did want to bring that up. I've been talking about it a little bit and looking at it for quite some time, but it's certainly worthy of some note, given this is going to be an almost $8 billion market value, of which he will control some $5.7 billion. When you include the earnout shares, the 40 million earnout shares, which I'm assuming the stock doesn't collapse after it goes public, but we'll see. We'll see.
I'm stunned. I think you're right. He will have a borrow against it. Some bank probably would lend him money based on the shares, but the company, David, if you valued it on earnings, sales, anything, it's not worth anywhere near what we're talking about.
No, it's $3 million in revenues.
Yeah, it'll be really interesting to see what happens when Reddit actually goes public. If it just tanks or if it rallies. I don't know. IPOs are highly risky. So we'll see. Anyway, Darden down 6%. We got a lot more red. We barely had a page of red earlier, and now we're about 3 or 4 slots past a page. So getting a little bit more with Apple down 1.2, but Tesla's only up 0.25% now. So very difficult to sort of grasp. Are we going just sideways here or what? But look at that. Restoration Hardware, 3.5% here. Yeah, they've had a nice uptrend over the last month here. And the Qs are finally rolling over a little bit. Now that's interesting. How interesting. Because yeah, yesterday was such a the market. I always think to myself when I'm trading too. It's like, do the opposite. You know, like today, I'm like, oh, you know, after yesterday's bullishness, should be pretty enthusiastic in the market. But then I thought to myself, okay, if it should be enthusiastic, buy puts. So it's like the opposite of expectation. It's like, you know, we're expecting the Fed to be bearish. We got dovish. Damn. Always do the opposite. Do the opposite of the expectation. And that's possibly because the expectation gets priced in, right? So, yeah. Very, very interesting. What else? Honest stock? Let's see. Boy, it's been a while since I've looked at that one. Honest. Oh, look. It's recovering. This is a $400 million market cap company. Boy, that's tiny. It's really popped off since the bottom over here. You know what? Maybe we can do a fundamental analysis on that in the Course Member Live and see some of the financials. I got to get some coffee and get into the live here. But holding NVIDIA stock short right now, making a quick buck, says so. That's right after the event ends. Push this button and let's look at NVIDIA.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
Yeah. Some stagnation. Is it the beginning of volatility? I don't know. Who knows? But what I do know is a few things for certain. Number one, I need coffee. Number two, price goes up on the Stocks and Psych, which gives you lifetime access to all trade alerts and Course Member live streams. Tomorrow at 11:59 p.m. Email us at staff@meetkevin.com if you got questions. If you have warrants and HouseHack from the first accredited investor round, those are due April 8th. That's coming up really soon. So those expire worthless. If you don't fulfill your warrants, you don't have to. And if you want to invest in HouseHack, go read the PPM at househack.com/2024. There is a regular accredited investor round going on. that ends in June. And then go check out the event for June 21st to 23rd. In the meantime, thank you so much for being here. We'll see you in the next one. Goodbye.